Hello friends, welcome you all. I am Sundar from Symphonia Wealth. So last video what we saw was on the non-resident individuals. So we saw in detail about who is a non-resident and what are the type of accounts which are available for him to operate. In this video we are going to just continue in terms of what are the investment opportunities available for a non-resident Indian. So as I told you earlier, the options available for a resident and non-resident are not any different. In fact, broadly, almost every investment opportunity available for a resident also can be utilized by a non-resident Indian. So let's go one by one. First, let's take the option of investing in a fixed deposit. So we all know that as a resident, we can do fixed deposits. Similarly, even NRI also can do a fixed deposit both under the NRI route as well as under the NRO route. So the only difference here is any interest which you gain from an NRI account is tax-free, but it has to be held for a minimum period of 1 year. Otherwise, any interest accumulated if withdrawn within a 6-month or a 12-month or anything less than a 1 year period, all interest accrued will not be paid. Any deposit held for more than 1 year only is liable for interest, and that interest is tax-free. The same is the case with a NRO deposit. NRO deposit is nothing but or equivalent to a resident deposit, where whatever interest you earn is taxable. So I will cover in detail what are the tax implications later in the video after covering all the other investment products available. So investing in real estate, that's one of the biggest or the most sought options for a NR. In fact, there are no restrictions for NR to invest in India when it comes to buying real estate. Investing in PPF, Public Provident Fund. In fact, there is a restriction on this. If you have opened an account when you were residing in India, and you've been continuing in a PPF account, assuming I started a PPF account say in 2015 and I got my employment outside the country in 2018, then I can continue the PPF account because I opened the PPF account when I was a resident Indian. Then you have the facility to keep continuing the PPF account. The only restriction here is a PPF account will mature at the end of the 15th year, which you will not be able to extend. Whereas a resident can actually extend even after the maturity in blocks of 5 years. Assuming I have already moved outside the country, say I have moved to Germany for example, now I have already become an NRI, can I open a PPF account now? The answer is no. If you have already opened an account, you can continue. If you want to open an account after becoming an NRI, it is not possible. So can an NRI invest in stocks? The answer is yes, but there are some few restrictions. For you to open a trading and demat account, you need to get a approval from RBI, which is called the Portfolio Investment Scheme. But once you get the approval, which is not very cumbersome, once you get it, then you can actually buy and sell stocks in India. The only restriction here is you cannot involve yourself in speculative trades or in intraday trades. You can take delivery of stocks, hold it and sell it at a later point of time. So that is definitely allowed in India when it comes to NRI investments in stocks. So investing in mutual funds. Again, this is one of the most popular investment avenues when it comes to non-resident. One, because of the ease of investing and the ease of even repatriating the money. The NRI can invest under both NRI route as well as through the NRO route into a mutual fund, where you can participate across products available under the mutual fund schemes, right from equity, debt, balanced or any kind of mutual fund investments are available when it comes to NRI investors. There are only a few restrictions when it comes to the country from where you want to make the investments, and the restriction is basically from the countries like US and Canada, and the restriction is you can invest in mutual funds provided when you are in India you can make the investments. You will not be able to do any investments when you are sitting outside the country. So this is the small restriction when it comes to NRI who is residing in US and Canada and few other countries. Otherwise, all investments into a mutual funds can be accessed by a non-resident Indian. So let's understand what is the tax implication when it comes to NRIs. Again, in fact, there is no difference between the tax rate when it comes to resident or non-resident. In fact, both are taxed at the same rate. The only difference is if you are a resident Indian, there is no TDS deducted in most cases. Especially in mutual fund, no TDS is deducted. Whereas when it comes to NRI investment in mutual funds, TDS is deducted. So if it is a investment into equity schemes, then for short term the tax is 15%, so TDS is 15%. If it is long term capital gain or arising out of equity, then it is 10%, so TDS is also 10%. If it is anything to do with non-equity schemes, ideally a debt scheme, then your tax is as per your income tax slab, whereas your TDS is at 30%. So if as a NR you don't fall under the tax bracket, you can get refund of tax deducted source after you file your taxes. So broadly there are no differences when it comes to tax rates. Even the resident is taxed at the same rate and the non-resident is taxed at the same rate. The only difference is in certain cases TDS is applicable to a NR, whereas TDS is not applicable to a resident Indian. So these are the broad set of products which are available for a non-resident Indian. So India being one of the fastest growing economy, all non-resident Indians get a very good opportunity to participate in the growth story of India. Hope you enjoyed the information provided in the video. Please do subscribe to our YouTube channel, Symphonia Chennai, and press the bell notification icon. Thank you for watching.